Hello and welcome to Crypto 101. My name is Aditya, and today we're going to talk about Bitcoin, why it was created, how it was created, and the market trends, that is, what market value it has had over the previous years, and how it's involved in the market, which companies are actually involved in Bitcoin the most. So let's begin. Let's start with the history of Bitcoin. The domain name bitcoin.org was registered on 18th August 2008. On 31st October 2008, a link to a paper authored by Satoshi Nakamoto titled Bitcoin, a peer-to-peer electronic cash system, was posted to a cryptography mailing list. Nakamoto implemented the Bitcoin software as open source code and released it in January 2009. Open source code is code which anybody can edit. It's that anybody can see, it's public, and anybody can edit. Nakamoto's identity remains unknown. Before disappearing in 2010, he had mined about 1 million Bitcoin and had handed the network alert key and control of the GitHub Bitcoin source tree over to Gavin Anderson. Anderson later became lead developer at the Bitcoin Foundation. Nakamoto as a person or a group of people, we have no idea who they are or who he is. Before disappearing in 2010, he had mined about 1 million Bitcoin. And also, right now, the most important person when it comes to Bitcoin is Gavin Anderson. In 2010, the first known commercial transaction using Bitcoin occurred when programmer Laszlo Hanyecz bought 2 Papa John pizzas for 10,000 Bitcoin. Okay, so these are quotes from the Bitcoin white paper. A white paper is a document which explains a complex issue and the reason for change in its philosophy. So these are quotes from the Bitcoin white paper, as I said. The first quote is, commerce on the internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. While the system works well enough for most transactions, it still suffers from the inherent weakness of the trust-based model. So as we talked about it previously, financial institutions and trusted third parties develop and mint fiat currency. These fiat currencies are what we use right now as currency, and the only thing that is backing this currency is the trust we hold in the government and or the institution that is minting these currencies to keep its stability. So instead of being based on a trust model, what Satoshi Nakamoto suggests is that we need an electronic payment system based on cryptographic proof instead of trust, allowing any two willing parties to transact directly with each other without the need of a trusted third party. In the age of technology, where we can have an algorithm or a code do the same work as the trusted third party, that is, transact between two people, all we need is cryptographic proof instead of trust to actually make the transaction. So the cryptographic proof is proposed as a solution, is proposed as a peer-to-peer distributed timestamp server. Now, what is a peer-to-peer distributed timestamp server? A timestamped server, like a newspaper article, has a timestamp on it. The same way, any transaction that is done through Bitcoin has a timestamp on it. This timestamp is widely published so that everybody in the server knows that at this time this transaction occurred. A peer-to-peer distributed server is a group of nodes or a group of CPUs around the world working on the same problem. For example, in this case, the problem is the ledger that is maintained for Bitcoin. It's called a blockchain, and it is maintained on multiple CPUs around the world, multiple PCs around the world, called nodes, and that is why it's called a peer-to-peer distributed server. If you want to know more about blockchain and distributed or decentralized systems, I've talked about it in a previous video of mine. The link to that will be in the description below. So let's talk about the working. We'll first read through all the points and then I'll explain it with a simple example. New transactions are broadcast to all nodes. Each node collects new transactions into a block. Each node works on finding a difficult proof of work for its block. When a node finds a proof of work, it broadcasts the block to all nodes. Nodes accept the block only if all transactions in it are valid and not already spent. Nodes express the acceptance of the block by working on creating the next block in the chain, using the hash of the accepted block as the previous hash. So there are multiple terms in this that we need to understand. For example, nodes, block, and hash. So what is a hash? The hash is like the address of the block. Inside the chain, there are multiple blocks and each block has a hash. The hash is considered to be the name of the block or the header of the block. Each hash is also registered on the next block as the hash of the previous block, so that there is a link going on between each block inside the chain. So suppose there is a new block that is created. There is the hash of the previous block in it as well as the hash of the current block which is being created. And the hash of the previous block works as a link between this block and the previous one, creating a chain. And now let's take an example of a blockchain, of a Bitcoin transaction, and understand how the transaction works. Now I, as person A, wants to send 1 Bitcoin to person B. What I will do is access my crypto wallet and authorize a transaction of 1 Bitcoin. Now this authorized transaction of 1 Bitcoin takes approximately 10 minutes to complete. What happens in this 10 minutes is this authorization of transaction goes to multiple nodes or multiple computers around the world where volunteers are trying to verify the transaction. What they're trying to verify is that I am only sending that amount to one person and not sending that 1 Bitcoin to multiple people, which is called double spending. So once I authorize a transaction of 1 Bitcoin, the verification of that transaction is done by multiple miners around the world. But in those 10 minutes where the verification occurs, I'm not the only person transacting. Multiple people around the world are trying to transact. So all these transactions together are stacked into one block after verification. And this block is considered as one of the blocks in the chain. But to be added to the chain, there needs to be a proof of work. So the nodes work on a proof of work, which is a difficult puzzle that they have to solve. And it can only be done by the CPU trying multiple times to find the solution to the problem. The solution needs to be smaller than a number which is called the target inside the block. And once they find the solution which is smaller than the target, the person who finds it first shares that block that they created with all the other nodes in the system, in the server, and all the other nodes verify if all the transactions inside that block is legit. Once the verification is complete and all the transactions in it are legit, a consensus is formed between all the nodes. So all the nodes accept this block as the next block by creating another block. Once the nodes accept that all the transactions are valid inside the block, they automatically start working on the next block and use the hash of the block that was just created as the previous hash, and thus the blockchain continues. So let's dive into the market history of Bitcoin and how it has gone over the previous years. Since 2009, that is on 3rd January 2009, the Bitcoin network was created when Nakamoto mined the starting block of the chain known as the Genesis block. The Genesis block is considered the first block in the blockchain. And Satoshi Nakamoto is the one who mined that first block. In 2011, the price started at 30 cents per Bitcoin, growing to $5.27 for the year. By the end of the year, it was $5.27. In 2012, Bitcoin started at $5.27 and grew to $13.30 by the end of the year. In 2013, prices started at $13.30 and rose to $770 by 1st January 2014. In 2014, it started at $770 and fell to $314. In 2015, prices started at $314 and rose to $434. In 2016, prices climbed up to $1,000 almost, $998 by 1st January 2017. It was $434 at the start of 2016, and by the end of 2016 or the 1st of January 2017, it had climbed up to $998. Prices started at $998 in 2017 and rose up to $13,412.44 to by 1st January 2018, after reaching an all-time high of $19,783.06 on 17 December 2017. The price on 1st January 2019 was $3,747, and it went down 72% for 2018 and down 81% since the all-time high. So the price on January 2019 was $3,747, which was 72% from 2018's price, down 72% from 2018's price, and down 81% since the all-time high on 17 December 2017. After trading about $10,000 in February 2020, on 13th March 2020, Bitcoin fell below $4,000 during a broad COVID-19 pandemic. On 19th January 2021, Elon Musk, the CEO for Tesla, placed hashtag Bitcoin in his Twitter profile, tweeting, "In retrospect, it was inevitable," which caused the price to briefly rise above $5,000 in an hour to $37,299. So on 19th January 2021, the price for Bitcoin was $37,299. On 13th March 2021, Bitcoin hit again the all-time high of $60,000. Market involvement. So what companies are involved in Bitcoin and what governments are involved in Bitcoin? How many have banned them? How many have accepted them as part of their daily transactions? Let's get into that. After early proof of concept transactions, that is testing of transactions, the first major use of Bitcoin was black market, such as the Silk Road. So if you are familiar with the dark web, the Silk Road was a market on the dark web where a lot of illegal things were sold. That was the first use of Bitcoin because it was very anonymous. It was very you couldn't track people down using if they were Bitcoin transactions. During its 30 months of existence, the Silk Road existed for about 30 months. Beginning in February 2011, the Silk Road exclusively accepted Bitcoins as payment, transacting 9.9 million in Bitcoins worth about $214 million. The Bitcoin Foundation was founded in September 2012 to promote the Bitcoin development and uptake. I think Gavin Anderson is a part of the Bitcoin Foundation, and it was founded in September 2012 to promote Bitcoin. Then in October 2013, the FBI seized about 30,000 Bitcoin from the dark website Silk Road, following the arrest of Ross William Ulbricht. These Bitcoins were sold at blind auction by the United States Marshal Service to venture capital investor Tim Draper. Now, there was a seizing of a certain amount of Bitcoin before this, and that is considered the first time a government seized Bitcoin as an asset class. But this is the first time a major seizure had happened of about 30,000 Bitcoin, and it was sold to venture capitalist investor Tim Draper. On 5th December 2013, the People's Bank of China prohibited Chinese financial institutions from using Bitcoins. So none of the banks or none of the financial institutions in China were allowed to use Bitcoin, and this was decreed by the People's Bank of China. On 30th July 2014, the Wikimedia Foundation started accepting donations of Bitcoin. China banned trading in Bitcoin, the first steps taken in September 2017, and a complete ban was started on 1st February 2018. Bitcoin prices then fell around $2,000. Bitcoin prices were negatively affected by several hacks or thefts from cryptocurrency exchanges, including thefts from Coincheck in January 2018, BitHub in June, and Bancor in July. For the first 6 months of 2018, $761 million worth of cryptocurrencies were reported stolen from exchanges. And even though the total of $761 million was not all Bitcoin, a lot of it, even though other cryptocurrencies were stolen, and that is added to this value, it all affected, all the cryptocurrencies that were stolen affected Bitcoin in a certain way. In December 2019, YouTube removed Bitcoin and cryptocurrency videos, but later restored the content after judging they had made the wrong call. In February 2019, Canadian cryptocurrency exchange Quadriga Fintech Solutions failed with approximately $200 million missing. During the week of 11th March 2020, as a result of the COVID-19 pandemic, cryptocurrency exchange Kraken experienced an 83% increase in the number of account signups over the week of Bitcoin price collapse, a result of buyers looking to capitalize on the low price. Because Bitcoin over the previous years had proved its value, but even though it was volatile, it had increased to such levels of value that people were looking to capitalize on the fact that it was at such a low price, and had an 83% increase in the number of account signups over 1 week. In August 2020, MicroStrategy invested 250 million in Bitcoin as a treasury reserve asset. In October 2020, Square Inc. put approximately 1% of their total assets, $50 million, in Bitcoin. November 2020, PayPal announced that all users in the US could buy, hold, or sell Bitcoin using PayPal. In December 2020, Massachusetts Mutual Life Insurance Company announced it had purchased $100 million in Bitcoin, worth of Bitcoin. In September 2020, Canton of Zug in Switzerland will started to accept tax payments in Bitcoin from February 2021. So it was announced in September 2020 that it will accept tax payments in Bitcoin from February 2021. On 25th January 2021, MicroStrategy again announced that it continued to buy Bitcoin from its previous purchase, and it has holdings of about 2.38 billion in Bitcoin as of 25th January 2021. On 8th February 2021, Tesla's announcement that it had purchased 1.5 billion in Bitcoin and planned to start accepting Bitcoin as payment for vehicles pushed Bitcoin price to an all-time high of 44,141, which was broken as of 17th March. As of 17th March, it is now 60,000. It was 16,000 and it dropped to about 56,000. As of 17 March 2021, the Grayscale Bitcoin Trust, which trades like a stock on the over-the-counter market, likely owns about 700,000 Bitcoin, which represents about 3.5% of the total supply and is worth more than $31 billion. So as we can see, a lot of major market players are actually invested in a lot of Bitcoin and are trusting Bitcoin as an asset because they know that it is going to increase in value and it has a lot of promise. That's all from me today, guys. We have gone through Bitcoin, the summary, basic history of Bitcoin, an understanding of how Bitcoin works, the market involvement of Bitcoin, that is, which companies are involved in Bitcoin and how they made Bitcoin a part of their portfolio, a major part of their portfolio, and the highs and lows of Bitcoin in the market, when it went down, when it went up in value, and why it went up and down in value during those times. I hope you found this information useful, and I'm not a financial advisor. I'm not giving you any kind of advice on whether to invest in Bitcoin or not, but this information gives you some insight on what Bitcoin was in the past and what Bitcoin will be in the future. And hopefully that information helps you and gives you an interest in researching more into Bitcoin and make your own decisions on whether or not to invest in Bitcoin. That's all from me today. Like, comment, subscribe, share, and wait for future videos where I dive into other altcoins or other cryptocurrencies that are on the market. Have a nice day. Bye.